Welcome to Lithium-ion Rocks, Season 1, Episode 16. Fastmarkets, hashtag Lithium-19, Santiago. LCE meets LME. You'll be hearing shortly an interview that we did with Fastmarkets at the last day of the conference before the site visit to SQM and Albemarle. And at the conclusion of that, I was planning to have Sound of Silence as the opening. And by great coincidence, while I was on the bus with Ernie Ortiz of Lithium Royalty Corp, he had mentioned when we were discussing this that, for the NBA Finals, Volkswagen actually had a big advertisement called the VW ID Buzz, where Sound of Silence was that commercial that you just heard. So I used it, but because you can't see it, at the very end of that, in the light of the Dieselgate scandal, they basically said, in the darkness, we found the light, introducing a new era of electric driving. So while the tenor of what you're about to hear is more kind of hello darkness, my old friend, this video was something that I want to actually give a shout out to David Gillum of Masterminds in Sydney, who sometime around February, March, I remember I was in Mexico on vacation, and he wrote a piece calling about the second coming of lithium, and that he saw, I think, later this year or into next year, but he said one of the major drivers that you'll see of it are when you see mass advertisements of consumer brands. So like this rollout by Volkswagen of this ad campaign, gearing up for the mass market car is meaningful in my opinion. So something to be optimistic and lithium-ion bullish about. Would also like to give a shout out to Albemarle and SQM personnel, a great deal of personnel who all pulled off a great site visit to the Atacama with some 80 people, and to the Fastmarkets staff that pulled it all off. Congratulations, too, to the Toronto Raptors, who won the sixth game and the NBA Finals, their first ever, beating the Golden State Warriors. And shout out to Constantine, the chairman of Neo Lithium, who I think is the biggest Raptors fan I've ever seen. Shout out as well to RJ in Sydney, who won the T-shirt and guest, the prior guest, Luke Kassam. And also shout out to all the 30 people or so who received and took tweet photos with their Lithium-ion Rocks swag. Welcome to Lithium-ion Rocks. It is June 12th, Wednesday at 5 o'clock at the very end of the Fastmarkets conference. And I have with me
William Adams,
Jon Mulcahy
from Fastmarkets. And I'm here with Rodney, and we're going to talk about three topics. One is first, just kind of takeaways after three significant days and lots of information and a pretty well-attended conference. And two, Will Adams is going to talk about his presentation, which was basically what most people care about, and that's a price forecast. And if you listen to the introductory music, you'll get a sense for the dynamic that as we left here. And lastly, the big news and congratulations to Fastmarkets for being appointed by the LME to formulate a lithium price and what all that means, why they won and what we take from here. So first, let's just, all four of us are just going to talk a little bit about our takeaways, from the conference. So Will, why don't you start?
Well, I think my first takeaway is that the people are generally fairly downbeat on prices. I think, that's understandable. We've had a big supply response over the last 18 months or so, and we've seen that reflected in prices. I think my second one is that there needs to be more financings in the upstream market. I think people are expecting more M&A activity also, and I think we're seeing a lot of investment in the downstream market, but not enough in the upstream market. I think those are sort of things we're going to be looking out for in the sort of months and quarters ahead. And I think there's another aspect was, the OEMs are spending billions of dollars and euros, and the market's really waiting to see when that starts to flood into lithium demand.
Yeah, and I think, from a pricing perspective, personally, there's clearly an appetite in the market to evolve in terms of how people are looking at formulating contracts. And I think the announcement from the LME really will galvanize that interest as we move on.
And just back to you, Will, in your previous statement, if you look at where the incumbents are at the moment and all the commitments they've made in future projects and spending, who is going to drive M&A?
Well, it's interesting. We saw the West Farmers coming in, and they were sort of from outside. But I think we will see more coming in from, the traditional producers. So, the South, I think we'll see more from the South American producers coming in time.
Albemarle is making major investments, right? And they indicated on a recent podcast that maybe they consider some downstream in China, as part of the Wodgina and Greenbushes. But I think they're otherwise constrained. SQM is very busy with trying to figure out, they have financial means to do it, but operational means, they were in Lithium Americas, so they I don't know exactly the reason for them leaving that, but potentially managing multiple projects, it was part of it. And there's Ganfeng has made significant investments now with Bacanora, if they're doing that. So that's two different countries that they're investing in. So I think they're constrained. Tianqi is constrained because they're trying to do a rights issue. And then Livent, had a terrible quarter. And so I don't know if I agree in the short term that the 5 incumbents, and then if you look a little bit beneath that, mineral resources I can't see, they're very kind of Western Australia focused, or Cobre theoretically could do something maybe small with the junior, but they have their expansion plans. So I'm hopeful that we have more West Farmers out there, and it makes sense that West Farmers, it makes sense that an Australian, because Australia was ahead, right, and kind of gets this, in the Lithium Valley concept, that a blue chip like that would do that. I would be hopeful that a kind of European chemical or an American chemical company would kind of come in, and I think that should happen in a year or two, and it makes sense for them to be a year or two behind. But it's to be seen. But today, actually, to talk about the big news on the Northvolt, equity financing. I'm tweeting about this, that announcement, right? The equity and the debt. If you just replace Northvolt with XYZ Lithium Company, right? That's what should happen, right? They pieced together debt, equity. There was some European support for it, and then there were a bunch of strategics, taking equity stakes. So, why couldn't converters, why couldn't financing take place in that kind of way, with Europeans recognizing, because we've talked about it, and again, Kassam mentioned, it's not a level playing field, right? In China, Europe is obviously regulatorily doing things, but they got to get to kind of the upstream. Maybe I think it'll happen.
I think you've got a market situation where you've got low prices, you've got low equity prices, and it might be quite foreign for OEMs to get involved in it, but I think there could be some very good reasons for them to get involved. They would be, if they took equity in them, then they'd actually be locking in these low prices as well as guaranteeing offtake. And I think that, while we see there's a market in an oversupply situation at the moment for a good few years, we have, further out, 2025 and onwards, we really do think we're going to be back in a situation where the market is getting very tight again. So I think that makes a lot of sense. But, it's fairly, for the OEMs, 5 years is a very short space of time, I think. But I think, it's going to take time for them to realize it. But now is probably the time where they should be getting involved.
They should, but they have a lot of things to think about through their supply chain, and going all the way upstream is something like they haven't had to contemplate since, Ford, bought rubber plantations in Brazil, Firestone tires. Yeah. So it's a challenge.
And just, there are a lot of conflicting opinions over a lot of things, but the one thing I sort of felt was quite a clear takeaway over the last few days is sort of preferred and the future direction, certainly in the near term, of cathode chemistry. Your guys' thoughts on that?
I mean, our view has been that the move to NMC 811 is, it's happening, but it's going to take longer than people have generally expected. What we have noticed this year and sort of since March is more interest and more involvement, I think, in some of the older technologies as well. And I think that will, LFP, so we think that will continue. And that's quite an interesting, so that's sort of boosting some of the demand for some of the technical grades, as well as giving lithium carbonate also another sort of a boost as well. But yeah, I think long term, we think we will move towards 811. And we also think that sort of the NMC battery is going to be around for a long time.
Yeah, so it certainly, I agree. It seemed to me 532, 622, LFP, NCA, those are pretty much take the lot, and then, we'll have to see on 811. But certainly for the next couple of years, I guess that looks promising for carbonate, given it's really a price-driven process. In the lithium agnostic 622, just go with cheap carbonate.
And as a result of that, that's why we're seeing sort of the lithium hydroxide prices, are converging now more towards the carbonate prices, and we think that trend will continue. It's already come down a long way. We see that sort of coming down further as well, possibly even to parity.
I mean, I've heard, you always hear a lot of things here, but that there could potentially be some issues arising with some future hydroxide production, certainly the ones coming on in Oz. I hear different commentary, but I think if there were to be some success or achieving on time and on budget and ramps, that you could even have lithium heresy and having hydroxide going back to a discount.
Yeah, we've heard that as well, actually. I just think it's very interesting that obviously, investment in hydroxide, and there's been a lot of talk, particularly at this conference, actually, at the rate in which it's going to increase. And, carbonate still remains the prevailing force. And, from my point of view personally, I don't see that changing anytime soon.
But people have made the directional change. So
it is moving that way, but I think the kind of rate of progress that was kind of promised a few years ago isn't going to...
Yeah, but I mean, from a production commitment perspective, yes. So now they've committed to producing hydroxide, but actually carbonate's the winner here for the next while.
But they haven't, they've committed, right? So we hear Kwinana, train number 1, 24,000 is kind of, up and running, but, it's not up and running, but it's late, right? And they may be hesitating on, the second one until the first one is there, right? And Albemarle talks about, we'll bring on supply as the market demand is there. So I'm not sold on that carbonate's going to be higher than hydroxide, right? From what I'm hearing from the majors, and Roskill said it, and others said, I think even in your forecast, are you forecasting carbonate higher than hydroxide?
We're actually forecasting it to come down to sort of parity.
To parity, yeah. Okay. So this is a debate that's in the market there. Like we heard from Albemarle, they think it's going to be a premium. We've heard from Roskill, they think it's going to be a premium. Some other people think it's going to be parity. Some things it's going to reverse.
But sort of, we're talking in the period, in the next few years, we think it's sort of coming down to parity. But after, I think once we get that sort of that stage where EVs become much more mainstream, and we are using the sort of the higher nickel batteries, then I think hydroxide price is going to be in more demand. There will be more supply around as well. But I think we also, because we think we're in a sort of surplus situation, I think there is that sort of flexibility at the moment. So if some of the hydroxide operations are delayed, then you can, the lithium will still be produced. It can go where it is going at the moment and be converted into carbonate if need be. I mean, within China, there's a lot of capacity, I think, for converting from
Switching,
switching. Yeah.
Talk about Chile. So we're in Chile, we're in Santiago, and the strategies of the major companies who are here, SQM and Albemarle, are to have both carbonate and hydroxide. So they're hedging their bets. And diversity of supply and diversity of the type, they'll be prepared for either outcome, and I think that's pretty smart. What I will observe is that those two majors are here in a major presence, as was Tianqi. This was a bit of a kind of coming out party for Tianqi as a sponsor, and Vivian Wu was here, and there was a whole entourage of Australian employees, of Tianqi that I saw, and maybe a couple of other non-Australians. Not here is Ganfeng. Not here is Livent, right? So Argentina focused Livent. I don't know what their excuse is. I understand Ganfeng had like an AGM, but surely they could have sent somebody, right? Ganfeng, we've talked about this. We're fans of Ganfeng. After the IPO, I wrote about it. Rodney's written about it, but the hope, like the very heavily discounted Hong Kong exchange, but from a transparency and a voice perspective, like you get to hear Luc Cassin, you get to hear Paul Graves, right? The music that I kind of started with, "Hello Darkness, My Old Friend," "Sound of Silence," is the Sound of Silence, Ganfeng. Like what's up? They speak with actions, right? And they're in back and Nora, but you don't get a chance to ask questions like I did of the Tianqi person, Emma, right? In that panel, as to in an industry starved for capital. We all agree. Everybody seems to agree they're starved for capital. But here's $4 billion going into SQM that will result in no additional supply, and there was no real answer to that. It was like a non-answer to that question, because I truly believe this is. Remains a Belt and Road kind of security of supply transaction. That's this is my opinion. There's title to my opinion that ultimately China potentially sees an ultimate takeover, right? And then they would direct the carbonate supply to China, so then China could have a discounted source of supply and have a competitive advantage in electric vehicles. That's my opinion behind this transaction.
But you've also seen, just as much as you've seen sort of some of the South American producers diversifying into Australia and diversifying into hard rock, it could equally be that Tianqi is diversifying into brine.
But they're not, right? If they were diversifying into brine to add supply, they could fund Lithium Power International, or they could fund, like Ganfeng did, an Argentine brine. It's $4 billion at a 50% premium. I don't buy it. Anyway, that's my soapbox.
Not sure what that was to do with the takeaway from the conference.
Well,
It's quite a strong point of view.
Don't sit on the fence.
The takeaway about that is that this was very much a Tianqi kind of coming out party, and I had an opportunity to interface with them, and I have a takeaway from that interface.
Yeah.
Okay, and that takeaway does not change my view.
Yeah.
But anyway, we'll switch topics to some other takeaways. I think sustainability, we had Lenny Pisagno on the program, and I thought her presentation was good, and that's an important, we're in Chile, but more than the sustainability aspect of it, I felt like Chile was kind of coming out, we're open for business.
Well, it was transparency as well, wasn't it? Throughout the supply chain. I think that goes not only from sourcing, but also to investing in local communities, but also in actually pricing of the commodity itself. There's been a lot of talk in terms of actually which price is the best used to a basis. The LME have come out and obviously partnered with us in terms of developing a benchmark. And I think that the whole industry is actually looking at various topics at the moment, and I think the key word is actually transparent.
there's not a lot transparent about the Tianqi SQM transaction, to be honest. But I agree with you, transparency was very much talked about, including by Vivian Wu. She talked all about transparency in a very complicated to penetrate the presentation in my observation. But anyway, I don't mean to overly ding Tianqi. I think they're a good operator. They're a partner of Albemarle, and they are a good operator. And it would be great, right, if I would love to see them invest in new supply in juniors rather than do this, because now they've levered up their balance sheet.
No access to cash flow at the asset level, minority stake, sort of hands-off directors.
And I don't think SQM management is particularly happy with it there. I think it was just kind of like forced, government to government situation. But anyway, that's enough on Tianqi. Hosted or introduced the European panel today, which I think is the security of supply. There weren't too many North American operators. If I think a difference between last year, like there were site visits to Thacker Pass, there was no real talk about clay here. Bacanora was also not here. This was like a major transaction, but again, it was Chile, it was brine, and it makes sense. This is kind of where we are, but just in observation, Europe was here, and again, back to Northvolt and Infinity and Keliber. Had an opportunity to get to know a bit better.
And Savannah were here as well.
You're right, Savannah was here as well.
If you look at the imminent implementation of EU CO2 emission standards and the penalties that are going to be slapped on, it's essentially, my understanding is it's put the European OEMs in a position where they have to go to EVs because it's that expensive. And that's kind of set, sort of changed the tone with, on the one hand, you've had Chinese EV subsidy cuts, and now we have the thrust of the EU emission standards. The one thing I have a little bit of a question mark on, and I know that VW and Mercedes-Benz have come out and spoken about wanting to be carbon neutral in their delivery of EVs, but the emission standards are captured on the showroom floor just as a snapshot at that point in time. We haven't seen any sort of roadmap as to how do they assess or penalize or promote the limiting of CO2 and GHG emissions from mine to showroom floor. That's been avoided. Yes, VW is now moving into battery production with Northvolt in Europe. The fact that they've signed an MOU to take a 10-year offtake from Ganfeng, in your mind, is that a sort of sort of an indication that they're likely to move up into cathodes quite soon?
No, not necessarily. I don't think. In my mind, I don't.
Is that you think they're going to hand it to a cathode manufacturer and say, "Fine, there's the supply, that's locked price, that now factors into what you deliver to us"?
Yeah, I think that's sort of the model. I think. Yeah.
Well,
Okay.
we do know a lot of automotive, across looking at their battery raw materials and looking at actually directly sourcing those materials, for the producers themselves. So I think that that's a model which is increasingly gaining traction.
So are we talking about then saying, fine, I source nickel, manganese, cobalt, lithium, and I give it to you, and you get a processing margin, effectively totally.
Yeah, and I think that's the model at the moment. But in time it might well change. But I think for now that's the sort of the model.
Because we are seeing some back integration from LG Chem, etc., looking to do a bigger percentage of their own cathode. I mean, that's happening.
Yeah.
I guess there are a lot of mouths to feed at the moment between spodumene, chemical, cathode, battery cell, battery pack, OEM.
Yeah, and there's also a lot of raw materials in which to acquire. This isn't just lithium necessarily. You're looking across the whole battery materials space, and as we mentioned briefly earlier, actually, the clarity of the supply chain and where you're sourcing your material from is very imperative to and that's something they've put huge onus on.
And that raises the question: did they chase, NCM 811 because they wanted to thrift cobalt out the battery? They didn't want to have DRC cobalt.
I personally don't think that that's too overstepping the mark. I think that it definitely was a concern of theirs in terms of ethical sourcing.
Yes to range, yes to energy efficiency. Yeah. I get that, but they also want.
There's also that underlying factor.
Yeah, I think I think there is that sort of concern that cobalt could potentially be one of the tighter metals again, not now, but down the road. But I also think the energy density is a very important thing. I think people want cars with long ranges, and I think that is that is certainly one of the reasons for the higher energy density, the request, the need for those.
Getting into people talking about wanting a long range, but the truth of it is, I mean, why in the world would we want a car with 1,000-kilometer range? We're having EV charging stations put in.
That's been, one of the discussion points for a long time now. Can infrastructure actually support the way in which the EV market is moving? And I think there's a huge investment across Europe to fulfill that function. And I think that you will start to see that, enough charging stations are made available for support.
But we're not necessarily talking 1,000, kilometers or miles. You're looking at sort of, if you can get 500, in most cars, most EVs, that means most people probably only have to then charge their car 3 or 4 times a month. Yeah, and that certainly helps then if the infrastructure isn't very good, because you don't have to recharge it every day. Therefore, you don't have to have a charging point at home necessarily. You can do it in car parks, you can do it at work.
I guess sort of the angle where I'm going here is, to my mind, in order to have mass EV penetration, you need cars being built in the 20 to 35,000 euro and dollar range. Now, to get a 500-kilometer range into that price segment, to my mind, doesn't make sense. The 500-kilometer is in the upper luxury sedan end, which is a fraction of. So the question is, in order to achieve mass EV penetration, people are going to have to accept lower range vehicles because there's a price constraint.
I agree, but you're also seeing from the automotives, increased sharing of information, increased sharing of technology, because they want to drive jobs as well. And I think they're looking at the huge investments they're making across the industry, and actually they need to cut costs as well in order to, as you say, make it accessible for people to actually buy an electric vehicle car.
Yeah, so we're getting the whole convergence of how do I make an electric vehicle and not lose money, but still achieve all of these things, and a supply chain survive.
Yeah, and it's it's going through a massive change. But I think also an electric vehicle, once the economies of scale come through, should be a lot cheaper than a petrol. It's a lot simpler, a lot less moving parts, and therefore less components going into each vehicle, and therefore that should have mean a cheaper car.
And there are also some interesting things. I had a long conversation with Dan Blondell about effectively cell and pack improvements that can be made that have nothing to do with actually, you can get a 25% gain or what have you without having changed anything in terms of the chemistry. So there is hope on that front, in terms of improvements, I guess, to get us to where we need to be.
We had a good chat with Dan at Nano One and a couple of other guests or speakers, people that we've interacted with that I thought were a good takeaway. It was great coup to get Javier Martinez of Morgan Stanley on that panel. So
yes, it was very interesting hearing him.
We had a very nice dinner with him. I know him. I called him, the day after SQM invested in Lithium Americas 4 years ago, and said, "You need to understand this because you cover SQM." And I've had a good relationship, with him for a time. I still have a good relationship, but in the interim, with his air supply call last year, I poked him a little bit. But when I saw him, he said, "I hope they don't throw tomatoes at me." But he was very. It was riveting, watching. Like you could see everybody really paying attention to what he was saying, And when he was comparing the lithium market to chickens and sugar, only supply mattered and demand didn't matter if it was 750 or a million. I mean, a number of people after the fact were just, questioning that. At the same time, the one significant investor at the conference, Sailing Stone, right, who were the smartest investors in the space in early SQM years ago, currently, as I understand it, are not holding any lithium stocks. So but very knowledgeable, very interested in the medium to long term. So those were good interactions. I found Jingwen Sun from China Metals, like a major. The conundrum here is just figuring out what's happening in China. And I spoke to him and I saw his presentation, which is exceptionally data rich. I need to kind of like download that and understand that. But figuring out what's happening in China is the biggest challenge in this industry. It's extremely opaque. And again, going back to my question on Tianqi, I was hoping that they did the Hong Kong IPO, because then they would at least be filings in English. But they're not going that route. They're having to do the rights offerings. We didn't even describe your background a bit, or just like who you are, what you each do for Fastmarkets. You've been around for a very long time, and one takeaway was that you have a lot of people in China, right? Analyzing this. So why don't we talk about that and then the LME?
Fastmarkets, as most people now know, is the sort of the new brand of Metal Bulletin, as it was, or Industrial Minerals. And the reason we changed, had a brand name change, was as a price reporting agency, as a PRA, we have bought other, Metal Bulletin had bought other PRAs in other commodities, so in wood, paper, and pulp. So the sort of the metal bulletin name didn't really suit or fit anymore. So hence, that's sort of Fastmarkets. But Fastmarkets is a part of Euromoney Institutional Financial Investors, and that is a $1.5 billion market cap, which is traded on the FTSE. It's part of the FTSE 250 on the London Stock Exchange. So we have a fairly global footprint with 13 offices around the world. We have a team. We have about a team of 370 people. We have 50 of those are price reporters in China, and then we also have the events team as well, which put on this event, and they put on about 50 events a year.
Yeah. So personally, I work in the price development space. So I'm responsible we cover 5,000 different prices globally. And I'm responsible for essentially understanding the specifications associated with each of those prices, engaging with the physical market and ensuring those prices are used as a basis for negotiations. And also, as you've heard this week, working with the exchanges to ensure we can develop hedging projects for the market.
The LME, what does it mean? Why they pick you? And what are the next steps? And then also, Will, you gave a presentation on your price forecasts.
Yep. So on the presentation, we are, we're bullish long term, but for the moment, we do see we're in a situation of oversupply. I mean, we're bullish on the whole of the EV and energy storage systems, and I think the energy storage system is equally important. Obviously, it's coming off a low base. On the EV side, we're looking for sort of compound average growth rate of about 35%. Between now and at 2025, and sort of a similar number, possibly even slightly higher on energy storage systems, but as I say, from a low base. The other area, I think, is there's a lot of battery capacity out there, and I think, so we're not worried about some of the downstream capacity. We think there is sufficient capacity, and because a lot of that is in China, we think, in the years going forward, there might well be excess capacity, which is often a case we see in China anyway, that there tends to be a lot of overcapacity there. So we're not worried about any bottlenecks on the sort of the downstream side. As I say, we are worried longer term about the supply side. So as we see EVs becoming more mainstream, and as we see energy storage system building up as well, we think the market's likely to move back into, we think it's going to be in a surplus up until about 2024, and then moving back into a deficit there onwards. And I think once we do start to see a bigger market, and still growing at a very rapid rate, the supply side is going to have a real tough time catching up and keeping up. Especially that is the one area which is sort of probably the most time sensitive, because it does take a lot of time to bring on new greenfield capacity. I think that's that's something which we need to be aware of, and sort of that's something we now need to be focused on, is just see when and what is going to bring that sort of investment money into the upstream part. As I said earlier on, maybe we'll see OEMs having to get involved. We talked earlier on also about M&A, but it's there are some giant mining companies out there that haven't really got involved. That's another case. I don't think people are necessarily thinking of that coming on anytime soon, but that we could be surprised, I suppose.
What's self-evident is that the equities went up when the spot price went up. The equities went down because the spot price is going down. But even yourself, right, you're saying you're bearish on pricing, maybe until 2023, which is longer than most, but...
No, not, if I could just butt in, I don't think we're bearish on prices until 2023. We're bearish on supply. Okay, I think the low price we think is going to be 2021, and then we're going to start anticipating the switch into a more deficit market. And that's once we get into a deficit situation, and the fact that the supply side might struggle, we think prices will start to anticipate that and start to move up. So our low price is 2021, and then from there onwards, we're looking for prices to start moving up in anticipation.
But you have oversupply until then.
Yeah, we have oversupply, but our numbers are, we have oversupply as how we see sort of the likelihood of what production is going to come on stream. But if we have low prices, we might well see more producer restraint, yes, or stockpiling, as we've seen. Where SQM said recently that they'll be producing 60,000 tons, but they'll be supplying to the market 45 to 50,000 tons. So that suggests the stockpiling.
Is there any sort of chance that we could see an increased demand from a shift in battery production, etc., in non-China, where they might hold bigger inventories and sort of run the tight sort of inventory management, which typically happens in China?
I think you could see that, but I think the other side, as we get more battery and more downstream capacity being built, you need working stock. So that will also absorb some of this surplus as well. But it's quite hard to sort of, I think these are sort of market factors which will move, and that will change the sort of the actual end of the balance at the end. So yeah, I think where we see the surplus is that's on paper, but we think there will be market forces and other factors that will actually tweak that. And I think that the market won't be although it'll be in the surplus, it won't be a surplus that really crashes prices.
It's more of a structural surplus, let's call it, than a...
Yes, agree.
The equities are following the prices in the short term, which makes no sense. I mean, it makes sense in traditional commodity markets, but in a nascent, immature market like this, where there's so much unpredictability, you need to look at the M&A data points, right? So Albemarle is not making this huge investment if they think prices are going to be, as Morgan Stanley is suggesting, 7,500. It's just not possible. Well, actually, in fairness to him, he's forecasting that bottom in 2021 and then going up from there as well. So I don't want to misrepresent that forecast either. But if you're a long-term investor, and most hedge funds are not, and those are people who kind of came in hot money in 2017 and funded some of the projects. But in fairness, there were a lot of companies, and there's no institutional market in this sector like there is a traditional venture capital. There's no private market. There's no real professional investors, and even the professional mining investors don't understand the chemical industry that is lithium. So the public markets are playing venture capital, right? So in venture capital, if you get 1 in 10 right, you're doing well, right? So 100 companies got some funding. And there's a wheat from chaff happening now. I gave, if I can just give a plug for my own presentation, right? I wrote, and thank you for putting me on that, financing a project, a lithium project panel, where I used my material girl, like a virgin, node, and just kind of augmented that. I feel like we're in lithium 3.0, right? Lithium 1.0, whatever, 2009, and then 2.0 was that 2017 period. And now in the wheat from chaff, I don't think, a rising tide, even if the price goes up, is going to lift all boats, right? The companies that have cash, realistic projects with that checklist of, various attributes, if they could survive this kind of downturn, but it could turn. It would be great if there were financial investors like sovereign wealth funds, like endowments, like some mentality that's in Scandinavia to come to this market. But again, going back, does it need subsidy? Maybe, but it would just be the impact investing. These people should understand that this is a bottleneck, that if we don't get the investment now, we're not going to. I think we have an 18-month window, 18 to 24-month window to actually get more of these projects financed. And if it doesn't happen, then the EV penetration numbers are at risk.
No, but I think the money, if it doesn't come from traditional sources, it will have to come from the OEMs. So the OEMs are spending billions on, making plants for electric vehicles, and therefore they will also realize that they need to invest. And I think we will see that.
Tesla mentioned it in their AGM yesterday that they might get into mining.
It's a big step there, isn't it?
Isn't that part of the logic of why you would have an LME contract?
Exactly.
And if you could have a term structure, because then you can say, what is the price going to be in 2024 or 2025, and a bank can hedge out a new operation. I mean, wouldn't that assist in managing supply and demand?
Exactly. I guess one of the key questions is actually what's scaring off finance? Is it the lack of transparency in the market in terms of actually understanding a market price? I think that is possibly one of the factors, but also in terms of actually availability of risk management. And obviously there is a need for that to attract investment, to ensure the supply is there when the boom actually hits.
I agree with you. The amount of money that's needed in this space is tiny in comparison to the other investments that they're going to make. And if they're making these investments, they're going to, within the next 18 to 24 months, you're going to see Volkswagen stroking a check, which they're currently unwilling to do. They're just like figuring out the market, and we'll sort it out. I do want to talk a little bit more in detail on just the contract and what's next. But the one thing I'll say was not spoken about a lot here, which I think is influencing the market, and is this whole U.S.-China trade dispute, right? Which is impacting the Chinese economy, and it's impacting demand for other commodities, and so lithium. So I believe that the U.S. trade war, or whatever, discussion, negotiation, the protractedness of it is affecting Chinese demand. It's not just the change of subsidies that's affecting Chinese demand. I have no data to back that up. It's just, it wasn't discussed. I've asked one or two people about it, and nobody really gave me a real answer, but I've got to believe it's... Actually, Anthony C., I did ask the question. Anthony C. commented that liquidity of the Chinese, they're working on very short days inventory. They just, if you work in hand to mouth, and he also mentioned that like the DSO that was bought, like took $300 million of liquidity, out of the market. So the Chinese market, and you can see it, Tianqi and Ganfeng, it's hard to raise money in China. So this must be impacting it. So to the extent that we get a resolution, it could be bullish.
I think it is impacting in China, but I think it's actually impacting it. Probably it should be slowing down the supply side because there isn't so much money, whether to buy the material to push through the converters. So that's one area. So it could actually be. I think it's positive and negative. On the EV side, I think you've still got very strong EV sales. It'll be interesting though, because one of the things we do look at if you look at sort of compare 2017, 18, and 2019, and you're looking at EV sales in China, you get generally, you've normally seen month-on-month dips in July, which I think is just a seasonal factor. Last year, but most of the other time, after the sort of the Lunar New Year sort of period, if you take that out, you see month-on-month growth. And then last year, we saw a dip also in June. So we had dips in June and then July, and then it started taking off again. And we put that down to a subsidy, to the effect of once the full implementation of the subsidies. And this year, we've seen actually a dip in April. But the March data was very strong. So I think there was just people who are anticipating the subsidy changes again, and they sort of bought more EVs ahead in March for the subsidy change. So it'd be very interesting to see whether we now start to see picking up again once the April dip has moved through. If we don't, then what you're saying on the bigger impact of the slowdown in China is it could be having an impact on EV sales, and I think that would be quite a development, I think.
Aren't we seeing that in car sales in total? Plummet.
Totally, and I think that is, but that we're not talking. But if we're talking EVs, I think that the market, the EV is gaining market share so much that at the moment it has generally not. It's not sort of cyclical. I don't think so. It's not been affected by the downturn. I don't think, because if people are buying cars, they tend to be pushed into an EV. And for China, one of the big reasons is because it's a licensing plate. So if you want to buy a petrol car, you could be waiting 2 years to get a license plate. But if you're buying an EV, you get it in a couple of weeks. So I think that's a huge incentive to buy EVs.
But I guess the question then is, but surely even if you're switching to EV, shouldn't aggregate car sales not be plummeted? It's just you're buying an EV instead of a general combustion.
No, but I agree that the part of the reason for the total vehicle sales is falling is because of the hardship in the hardship on the economy side. But I don't think that's necessarily. I don't think that's causing EV sales to fall. It might be slowing them down.
The growth rate of EVs could be even
higher.
Faster.
Yes.
Okay. So let's switch to the LME contract, and then we'll conclude.
Yeah, so obviously it was announced this week our partnership with the London Metal Exchange to develop a lithium benchmark and risk management tools associated with that. I think that from our perspective, we're very happy to be working with the LME. I think there were several factors for why we were chosen in the partnership, including, we've been covering lithium at Fastmarkets for over 30 years in terms of pricing, so we've got a vast experience of covering these markets. We've also, over the last 2 years in particular, seen a real uptake in terms of our prices being used in physical contracts. So a lot of actual major players now are using it as the basis for negotiations, which was a real sticking point, I think, in getting us this contract. I think there's several other factors as well in terms of our global reach. So obviously, this, for example, is the 11th Lithium Supply Markets event, and we've had over 400 delegates here. So you guys know how well attended this event was. I think that's a big pull for us.
How does that compare? I'm just curious, as a data point. It's in Santiago, so it was harder to get to, but at the same time, maybe it's a big industry in Chile, so maybe you had big Chilean representatives. Another takeaway was there was a lot of Spanish spoken in some of your presentations, Spanish only. But
there was translation available.
How do you, over the last few years, is this 400 number higher or lower than previous years?
I think it's in line with what we've been seeing. Obviously, what we're trying to do is, gauge interest globally. So we'll keep rotating these events, and we've got another event in September, which is a battery raw materials event based in Amsterdam. So we expect roughly the same level of attendance there as well.
Okay. So and continue. So what's next in the process for the development of an index?
Yeah, so I guess from our point of view, we've been successful in engaging stakeholders throughout the supply chain, and we'll continue to work with every element of the supply chain to ensure we can develop a benchmark which is able to be used as a basis for negotiations. And that's an evolving project. As we've discussed, throughout the process and throughout this conversation, the market's evolving at a very fast rate. And as a result, we'll continue to provide the pricing mechanisms necessary to facilitate trading. In terms of our relationship with the LME, we'll look to develop a contract once we've established a definitive benchmark.
And you already have a relationship with the LME for cobalt, is that right?
Exactly, yeah.
And any other metals?
Alumina, aluminium premiums. So we have a long-standing relationship with the LME.
Okay, and actually you're remembering alumina, you were talking Will Adams and Ken Hoffman at McKinsey in his presentation or his discussion, having 30 years of history, trying to draw parallels. I think he made some parallel to steel sheets as well as alumina.
A garbage can.
Garbage can.
Yeah, it's interesting because when the aluminium contract was launched by the LME in 1979, it was the aluminium producers who wanted nothing to do with it. But now, they've embraced it with both hands, and it's a big contract. It's a very liquid contract, and it services the market well.
Okay, great. So I think we will conclude there. Those are like all of our takeaways. But there was also one very significant thing that happened at this conference, and that was a lot of giveaways. And that was of our Lithium-ion Rocks T-shirt.
I wonder where you were going with this.
I hope we're going to get one of those.
In Lithium-ion Rocks, Lithium-ion Bull, and through our respective LinkedIn and Twitter posts, Rodney and I may share with our audience some rationale for a stock for which we have conviction, to own or not to own. If you agree or disagree with and act on or against the rationale of anything said or written in this or any other Lithium-ion Rocks or Lithium-ion Bull, that's your free choice. But to be clear, what you are listening to or reading is not investment advice and may not be unbiased. It should not be construed as an investment recommendation to buy or sell any security. Rodney and I are not registered investment advisors nor broker-dealers. Please visit libull.com for further disclaimers.